impossible to be like this guy, Spock, because we don't have Vulcan brains. We have human brains. And even if you're an automated trader, you're going to intervene with your system based upon emotion. What's going to happen is we will always have emotion, and I'm going to show you why. I'm going to show you how that happens, and I'm going to give you some tips on how to deal with that. Something that I often see and often hear, and I'm sure many people are familiar with this, is that well-meaning traders, educators, and others will tell you to just focus on the probabilities, develop a good plan, etc. And those things will help you to detach from the emotions that come with trading. But I think the very small percentage of very successful traders is proof of the pudding that shows that something is really wrong with that advice. Something is missing with that advice. And I'm going to give you the missing pieces today. Now, some of you already realize that it's impossible to eliminate emotion. People who've heard me talk before perhaps are familiar with the variety of trading psychology that I embrace. So you're probably familiar with the idea that since we can't eliminate emotions, we have to manage our emotions. And the approach that I take is learning to use your emotion as a source of information rather than an obstacle in your trading. Now, one of the very popular areas that people are very familiar with that it's not trading psychology per se, it's more along the lines of behavioral finance, behavioral economics, it goes by different names, would be the various cognitive biases. And I just have a list of 4 of them up here on the screen. There's actually, I think, 97 of these different cognitive biases that have been very well researched and cataloged, labeled, talked about endlessly. The problem is that there is not much talk about how these biases actually operate and what to do around these biases. And what I'm going to tell you is that although we can easily attribute for a variety of trading problems to a cognitive bias or a group of biases, what you probably don't know is that there is a group of leading brain researchers, brain scientists. Antonio Damasio is one, Jennifer Lerner is another, Antoine Becquera is another. There's many, so I'll talk about a few of them later. Many of these brain researchers have been providing empirical evidence showing that it's impossible to separate your thinking or your cognition from your emotions. So we have to understand what underlies these various cognitive biases. And these are just 4 that I have up here for example. These aren't the only 4 biases that I'm concerned with or that you should be concerned with, but what underlies cognitive biases? Well, if you read anything about a cognitive bias, at some point in the article or the book, you're going to see the word emotion. They're going to talk about how emotion is involved, but they generally don't go any further than that or talk about how that actually works, because there's actually a whole different realm of research called neuroeconomics that actually does talk about that. For example, Daniel Kahneman, who's the very famous psychologist who came up with prospect theory many, many, many years ago, has a well-known book, Thinking, Fast and Slow, very popular book, very good book. What he talks about, he gives a lot of interesting examples of loss aversion and prospect theory and all the different biases. And in his book, in a few different places, I think in maybe 4 or 5 different places, he doesn't really attempt to explain what's happening, but he does hint at the fact that it's emotion that's involved. So no one really talks about what's under the hood with a cognitive bias. They kind of dance around it. And I'm going to talk more about what's under the hood. And I'm going to base it on my own experience as a trader myself and what I've seen as a coach with a lot of different traders up and down the spectrum, talking about very large, very successful traders to smaller independent traders who are struggling to become profitable, and everybody in between. And I'll tell you, for once I had not more than once, but just recently, I had another trader referred to me who basically said up front in our first conversation, he said, emotions are not really my problem. He had his biases all kind of categorized. He had his errors, his trading mistakes, categorized into biases. That's where I got this list from. He actually had 4 biases that he told me were his problem, and he just wanted help eliminating these 4 biases. And he pointed out that he had been previously successful in other endeavors in his life before he came to trading, but that something about trading causes him to succumb to confirmation bias, for instance, and loss aversion. And he told me that he keeps on doing things that he shouldn't be doing, even though he's familiar and knows that these biases are present. So how come a very intelligent person who's been very successful in other endeavors in his life, who's very familiar with cognitive biases, still makes the same mistakes? We're going to talk about that and how to deal with it. Well, one of the things that happens is that, and I'm going to assume that everyone here is discretionary to on some level or another as a trader, and even if you're an automated trader working a black box, there's discretion involved in that because you have to design, you have to come up with the algos, to select the parameters, you have to know when to turn on and off the system, when to tinker with it. So on a certain level, we are all discretionary traders. And when we are exposed to constant uncertainty and mixed information, what we're going to be exposed to is a forced situation where we have to make a decision. Okay, even if you have a plan, even if you have good rules, even if you understand the probabilities, discretion means judgment. It means making a decision. So most traders are going to focus, most independent traders, and there's a difference here that I see between professionals and independents. Most independents are going to focus on learning setups. They're going to focus on learning how to read the market and so on. But the ability to read the market, or the idea that you can follow someone else, is not really what makes a successful trader. I've been around long enough to know this, and I've seen it in my own trading, and I know this from working with clients firsthand, both professionals and independents. What happens is how you respond to the discomfort that comes with the uncertainty. For instance, should I hold this loser a little longer in case it comes back? Or, I'm tired of missing out on moves, so I'm going to get in right now. Or maybe you're angry at the market for getting just one ticked on a stop and then it goes in your favor without you on it anymore. How you respond to these and the many other forms of discomfort that regularly occur in trading all the time, it's part of the game. How you respond to these types of discomfort and others is what will define you as a trader. So in trading, what it comes down to is we have to make split-second decisions. And even if you have rules, even if you have a plan, even if you have your hypothesis set up for the day, you have to make a split-second decision. And this decision-making is done in a pretty heated state. We're in a hot state emotionally. We're under pressure. And this may be because it's right after a loss, or we're on a winning streak, we don't want it to end, or we're on a losing streak, or whatever it is. There is an emotional state where there's some anxiety, or some fear, or a variety of different emotions. I'm not going to go through the list. But as you listen to me right now, unless some of you might be trading after markets with all the earnings releases today, but for most of you listening to me right now, or perhaps when you're reading a book about trading psychology, you're in a relatively calm state. But when you start trading again tomorrow morning or later tonight or whenever you trade, you're no longer going to be in the same state that you're in right now as you listen to me. And that's going to cause you to react differently than what you think, than the way you think you're going to react. In the market, price generally follows the path of least resistance, which is what the way we see it is price goes up and down in search of more buyers and sellers. And if you're a student of auction market theory or market profile, then you know what I mean. And in many ways, as a trading psychologist, I want you to know that the human mind also tends to follow the path of least resistance as well. We tend to seek comfort, and we try to avoid pain or discomfort. That's the path of least resistance that humans will take. So what I'm saying is that while price follows the path of least resistance, the path that we must follow as a trader may involve pushing ourselves beyond our comfort level into that resistance zone. So price takes that path of least resistance, but as a trader, we have to often take the path of going into the resistance. Now, a really common pattern for a trader may be that they are taking that path of least resistance over and over and over, and they never get anywhere. And instead, they accumulate a lot of information about trading, perhaps even trading psychology. but they never ever get past any particular previous level they've ever had, any previous success they've ever had, or perhaps they never even make money in the first place, but yet they feel very close to getting there. And the reason why they feel close is because they've had a lot of near hits. They've had a lot of moments where it was really close, and they've accumulated so much information, and they can actually start to see the market and see what's happening, and even trade on their simulator successfully. But when it comes to trading live, or it comes to making those split-second decisions, it all changes. It all goes out the window. Now, this is an example of how, in my opinion, that raw and unacknowledged, unexpressed, unmanaged emotion, the fear of missing out, the pain of taking a loss, the various emotions that we experience in trading, how these unexpressed emotions can easily result in impulsive behavior, such as taking an impulse trade, or moving the stop, or freezing upon entry when you're supposed to hit that buy or sell button to get in. Now, acting out is something that psychologists are very familiar with. In fact, there's an actual term. We call it acting out. And what acting out is basically when the energy of the emotion builds up so much that it ends up manifesting as a behavior. Okay, think of emotion as water. Water will eventually find an outlet. Same with emotional energy. Eventually it finds an outlet. So if that emotional energy is not managed, it will find an outlet in your behavior. And later in this webinar, I'll sort of outline some things that you can do to manage emotions, to change your behavior. Okay? I mean, a lot of traders will spend so much time focusing on doing the right thing and practicing their setups and sim trading and learning setups. I'm one trader that I've worked with in the past named Bob, very successful guy, engineering background, very much a perfectionist, can identify opportunities in a very, very successfully, can identify favorable reward to risk ratios very easily, knows what to do. But right before he came to work with me as a client, he was able to start to get himself into trades a little bit more. He found that he was able to start to pull the trigger to some degree, but he was still getting out really early. He would get out at the first sign that a trade would begin to stall out or pull back a little bit, even if it was still in the money for him. And what he learned in coaching was that need to be perfect wasn't, although it served him very well as an engineer. He actually owned his own company, a small company that he sold. It served him well in other areas of his life as well. But in trading, it was not it was actually getting in his way. His need to be perfect, what he learned was actually what was really happening with him. And I'll get into some of the subconscious stuff here shortly. But what was happening for Bob was that he was really trying to avoid the pain of not being good enough, the pain of disappointment, the pain of not being perfect. And that's what was causing him to get out of his winning trades too early. And of course, anyone who's been trading long enough, or anyone who's been trading at all, you know that it's pretty darn rare that you have a trade that just takes off from your entry and zips right to your target without any heat at all. There's going to be heat. And for someone who's a perfectionist, taking heat, you're going to adapt to that by wanting to protect yourself, and you're going to want to remain perfect, and you're going to want to grab those small profits really quickly. A very common pattern you see with very intelligent people and very people who have strong needs for perfection, who often find their way into trading. A lot of people like that. Now, on this slide, I have some advice that we hear all the time. Plan the trade and trade the plan. Perhaps every educator has uttered that sentence, as well as only take high probability setups, or the variation of that is, only take a trade if you identify a positive reward to risk ratio. And all the various varieties of those statements, great advice, very well-meaning advice, but there's something really seriously missing with this advice. And for the first sentence, the plan the trade and trade the plan, it's what's happening here is planning the trade is all about, that's an intellectual endeavor. That's our logic. That's our prefrontal cortex in control. We're able to come up with our hypotheses, come up with our levels, develop our methodology. Hopefully we can even articulate our edge in the market. That's all planning the trade. But then trading the plan is an entirely another ballgame. That second half of that first sentence, trading the plan is about execution. Okay, and execution is an action. And in order to act, you actually have to feel confident. You have to feel confident in your method, whether you have an edge or not, and you have to be confident in yourself that you're going to do the right thing. All the setups in the world, all the trading rules in the world, the best checklists, the post-it notes, all that stuff's not going to help you at all if you don't have any confidence in yourself. And just because you know the probabilities, it does not mean you're going to act in accordance with those probabilities. Because like I said earlier, it's really going to come down to how you respond to discomfort. And by the way, I'm going to take a bunch of questions later. I'm going to try and leave room to take questions. I'm going to zip through this quickly since I wasn't able to start on time, and I'm going to leave time at the end to answer your questions and hopefully give you guys some advice that's specific to your situation. So one of the first things and one of the most important aspects of becoming a better trader is to understand that it comes down to self-management, okay? There's a very direct correlation, a very direct relationship, I should say, between self-management and trade management. There's even a direct relationship, in my opinion, between self-awareness and market awareness. And I've seen this with some very successful traders. Very successful traders often are very self-aware. They know what they're feeling. They know what they're thinking. They know why they're feeling it and why they're thinking it. And they're able to, based upon that, they're able to control themselves a little bit more. And that's oftentimes the only difference between a successful trader and a trader who's not successful. You know, plans and probabilities will do you no good if you repeatedly ignore them when you experience anxiety, such as the fear of missing out, or the fear of the pain of taking a loss, or some other type of pressure that we regularly will face in trading. So let's talk about feelings, and there's a lot of ways to talk about feelings. I'm just going to use this particular slide as an example. I call it the risk spectrum, or the feelings about risk spectrum, where one side is extreme risk-seeking behavior or extreme emotion associated with risk-seeking. The other side of the spectrum is risk-aversive behavior or feelings that go along with risk aversion. And what happens is that our response to discomfort, like I mentioned earlier, will define us as a trader. And our response to discomfort can often show up in our feelings about risk. Now, you know, oftentimes I'm asked by people who don't trade at all, friends of mine, neighbors, people who will ask me, well, what is trading all about? And how should I become a trader, and what do traders do? And so what I often will tell people who are not involved in trading, and actually I would even tell this to people who are involved in trading, my definition of what trading is very, very simple. It comes down to simultaneously identifying opportunity and defining your risk. It's simultaneously identifying and defining your risk over and over and over and over, and then responding, taking action in accordance with that. That's all it really is. Sounds very simple, but it's not so easy to pull off, as I'm sure most of you would agree with. So even if you can determine a favorable reward to risk ratio for a trade, ultimately it's going to be your P&L over time. That's going to be more of a reflection of how you feel about your risk and how you feel about opportunity. And so to change your behavior, what it means, to change how you handle yourself, if you're someone who takes too many impulse trades, if you're someone who gets involved in revenge trading, or you move your stop and double down onto losers, in order to change those types of behaviors, it's going to mean that you have to work on changing your response to risk, your response to opportunity, your response to uncertainty. All those things that will make you uncomfortable. And like I said, opportunity will make you uncomfortable. I'll use an example of a trader that I know named Matt, who is an underperforming professional trader, not an independent trader, professional. Matt's actually not his real name. And he's had periods of success in the past, but lacks some consistency. He's had some pretty good swings in his P&L. And I'm sure this probably sounds familiar to people. And in his search for consistency, one of the things that Matt did is he took some personality tests, trying to find the fit between his personality and his trading style. He's been on different prop desks. He's tried to change his style to try and match his personality. And, he's tried different asset classes to explore different time frames, but kept finding that he made many of the same mistakes. And what I'm going to tell you, for someone like Matt, it often what it's going to take is more than simply just the right fit between the trading method, the product, the time frame, the style. It's going to take more than just a good fit. Good fit is important, don't get me wrong. I'm not saying it's not important, but that's only one part of the puzzle. It takes more than the fit, more than a good plan, more than probabilities. The real job of a trader is to be able to tolerate the discomfort that comes with our response to risk, our response to uncertainty. And many traders will become overly risk-seeking as a maladaptive coping strategy to discomfort. Other traders become more risk-averse as their maladaptive attempt to cope with discomfort. And when you understand your maladaptive style of how you deal with discomfort, you can begin to kind of create a psychological plan for yourself. That's really what I would encourage everyone to do. As part of your trading plan, you need to either make a psychological plan part of it or have a separate psychological plan. In other words, you need to address the psychology in your trading plan. That's a really critical part of trading. And if you've tried things like visualization and mental rehearsal, deliberate practice, neurolinguistic programming, affirmations, positive self-talk, all the different things that people will try, and you still find that you make the same mistakes, chances are that it's going to take more than those things to help you change your response to risk and opportunity. It's going to take understanding what's also really happening on a subconscious level, and I'm going to get into that here in another slide after this slide. The slide you're looking at now is a Rorschach inkblot. People may recognize it. And I like to say that the market is like a giant inkblot. We don't see the market as it is. We see it as we are. It's how we respond to uncertainty and ambiguity. And this is a very ambiguous picture. It can mean a lot of different things to different people. How we respond to ambiguity will make a big difference in your trading. So it's not how you analyze the chart, how well you analyze charts, or even how robust your methodology is. It's really going to be about what you perceive and then how you respond to what you perceive. And here's the kicker. Our perception is very influenced by our emotion and our physical state. I'll say that again. Our perception is very influenced by our emotion and our physical state. There's ample empirical research that shows this to be the case. My clients who I work with, I send them a lot of the neuroscience research so they can see where this information comes from. That's not my opinion. This is something that's been shown to be the case in the laboratory as well as out in the field now as well. Now, psychologists have developed a lot of tests to assess personality, right? I'm sure people are familiar with some of them. But if you ever wondered why, there's always people who seem to slip through these screenings. For example, there's police officers, military. You'll often hear about in the news every once in a while, someone kind of goes off the rails, does something horribly wrong, irrational, but yet we thought that, maybe it was a police officer or a military person. We thought they should have been screened. How can people like that slip through the system? Didn't they have a personality test? Yes. Police officers all go through screenings. A lot of people go through screenings, but people slip through. I used to work many, many, many years ago. I was a contractor. I did a lot of training, did some threat assessment, crisis management, a lot of assessment work for the Defense Department in some sensitive areas. So people slip through, and I will tell you, it's very easy to slip through the personality test. What's not so easy to slip through is an interview, or when you talk to someone, or you have them, you ask them to respond to an ambiguous situation. You can learn a lot more about someone that way than you can by just giving them a personality test. One of the things that I did many years ago, back in the 90s, and actually, even into the 2000s, I stopped doing it maybe about 9 or 10 years ago. I used to do, some of my consulting work was around bank robberies. I was the person who was contacted within minutes of a serious bank robbery. I had a contract with a major bank, and they would actually put me on the phone with the bank manager and the employees, and I would be talking to them within minutes of the robbery. I was on the phone with them wherever it was in the country, and I was often I was the first responder. And many of these employees, well, they're all actually, should say not many of them, were trained on how to deal with bank robberies. But when the bank robbery would actually happen, they would act very, very differently. And I would also see a variety of different trauma response. Some people who were, you would think on the surface, were pretty macho, pretty together, would just be just unravel. And then other people, perhaps someone who you might think would be more delicate or sensitive, would actually hold it together much better. So how people react, you never really know, especially on a personality test. There's a wide variation in people, a wide variation that people will have in response to trauma. And what I'm going to say is that trading may not seem traumatic like a bank robbery, but there is a lot of common ground. And the common ground is basically how you respond to pressure, especially pressure that you thought you were planning for, but then when it shows up, unexpected pressure, all those plans, all the training, all those trading aphorisms that you've heard before go out the window, right? The trade plan gets ignored. The promises you made to yourself last night or this morning to do it better, that promise is forgotten. The big post-it note that says be patient or let go of my losers, all that stuff just blends into the background and it goes unnoticed. So, how do we change? Well, one of the ways that we change is through increased self-awareness, including emotional awareness. And the reason I say this is that self-awareness and emotional awareness is the beginning of change. It's one of the primary building blocks of moving past your current limits and barriers. And one of the most important things that you can learn about yourself is how your emotions, in particular, your own unique set of emotions and your feelings interact with your thinking, your perception, and your judgment. Traders sometimes ask about developing, how can they develop a better habit? I get emails from people all the time. How can I, the ones I'm getting lately in the last year, ever since the Power of Habit book came out, which is a very popular book, people are asking, how can I develop better habits or better routines? And I will say, developing routines are very helpful, starting small and working up to larger routines, right? That's the common path. That's often, that's the advice that's usually given. That's a very, very positive thing to do. But these habits and these routines will not actually stick if you can't tolerate the discomfort very well, okay? Professional traders have risk managers, but independent traders need to rely on themselves. And even if you have a trading buddy, or if you're part of a group, you have to learn how to rely on yourself. Even if you're professional, you have to learn how to rely on yourself. So understanding how emotions play an important role in your trading is a key part of getting to the next level. And there's an important quote that I have on this page here that comes from Jennifer Lerner, who does a lot of research at Harvard. She's worked with traders, does a lot of neuroscience research, and what she has shown, and many others like Antonio Damasio and many others are showing, that our emotion actually provides the fuel for our actions. That's the way I say it. She says it in her words that emotions influence numerous cognitive processes, our attention, our perception, our evaluative judgments. But the way to remember it is simply that logic may drive your thinking, but emotions provide the fuel for actions. And that's what we always have to remember. So we have to understand how to manage our emotions, including the subconscious emotions. And here's where I want to talk about some of the unconscious factors that are huge in our trading. Unfortunately, I don't have time to get into this today. I'm going to be pretty brief, but one of the things that makes self-awareness and emotional awareness difficult, and one of the things that, people kind of give it, they talk about it a little bit, but they don't really understand the power of it or the benefit of it if they don't work a lot with the unconscious. Because what's difficult is that much of what is occurring for us at any given time is outside of our present awareness. Our brain can only process so much. What's mostly happening is outside of our awareness. And this not only includes our subconscious beliefs and our perceptions, like Jennifer Lerner points out, our perceptions are often subconscious, but it also includes our emotions. Emotions could be subconscious as well. So we're influenced by many subconscious factors, and I don't have time to get into all of them, but it's a very big area to explore things like subconscious and limited beliefs. But I will give you some examples of how the subconscious operates. I'll tell you, it's been my experience, both as a trader myself, so I've been down this road many times as a trader, up and down, all around, and worked with a lot of traders, that sustainable change requires understanding of what's going on subconsciously. My clients who go the furthest are the ones that have the deeper understanding of what's going on with them subconsciously. And one of the ways we do this is to become more aware of our subconscious motivations. And one of the things to understand here, and this is a key concept, I don't have time to spend on it today, but I hope you write this down, is that our subconscious motivations for underperforming as a trader often will have something to do with trying to get some type of unmet developmental need met, or trying to become gratified on some level, such as our need for approval or acceptance, or to avoid failure or disappointment, or something else along these lines. When these types of needs, when these needs go unmet, when they are really subconscious, or we're aware of them, but we're not aware of when we're trying to get those needs met, what happens is we develop maladaptive coping skills, or maladaptive coping styles, or maladaptive coping strategies, or defense mechanisms. We defend ourselves. And the way these things show up, these maladaptive coping strategies show up in our trading. Things like freezing at the entry to avoid the pain that comes with loss, or holding on to a loser, or adding to it to avoid the frustration and pain of loss that might confirm that maybe I'm not good enough. Maybe I won't get that acceptance that I'm looking for. Or perhaps taking an impulse or revenge trade to help avoid the fear of not being good enough. And what I've seen over and over and over many years working as a coach is that with my clients, when they understand the personal reasons fueling their maladaptive behaviors as a trader, the insight that comes with that is often the beginning of real change for them. But what most traders will do instead is they're going to read and they're going to accumulate more knowledge about markets, even more knowledge about trading psychology. They're going to develop checklists. They're going to develop more rules. They're going to change their rules. They're going to change methods. They're going to change chat rooms. They're going to do all kinds of things. But in the end, what's going to always happen is that in the heat of the moment, they're going to end up falling back into their old behaviors. Understanding our self-limited beliefs and the maladaptive coping strategies is not for the faint of heart. That type of work, the type of trading psychology I do, is not easy. It takes work and it takes courage to do this kind of work. Now, there are other approaches to trading psychology, but this is what I see in terms of my clients who see the most improvement, and it's the type of work that I do. Now, as I mentioned, emotions are often subconscious, and so I wanted to show you a chart that was developed, not by me. This was a chart that was developed by some researchers at a university in Finland just last year in 2013, and it shows that many people, and I've always known this, but it's a nice kind of graphic display of how people can feel their emotions physically, showing up in different parts of the body. And I'm showing you this because many people actually have difficulty identifying emotion. Emotion can be a bodily sensation first, and sometimes it just remains as a bodily sensation without even a mental component, or mental aspect, I should say. Now, one of the most important areas in emotion research is something called the somatic marker hypothesis. You can Google it, somatic marker hypothesis. It's an area of research that I've been following for many years. I'm very familiar with it. It's been developed by some leading brain researchers and neuroscientists like Antonio Damasio and others. And in essence, what the somatic marker hypothesis says is that emotion, including the physical sensation of emotion, guides our decision-making much more than we realize. Okay? And what the somatic marker hypothesis basically says is that we go through a process. We go through a process of assessing the incentive value of the choices that are available to us. Do I get in? Do I get out? Do I stay in? Do I stay out? And we do it using both cognitive and emotional processes. And our cognitive and emotional processes are very intertwined. You cannot separate your cognitive processes from your emotional processes. When we face complex and conflicting choices, do I get in, do I get out, we may be unable to decide using only our cognitive processes. Therefore, our brains are going to become overheated, basically, and we're going to end up, emotion is going to become part of the equation. So again, do a Google search for somatic marker hypothesis if you're more interested in this. There's a lot of interesting information out there. I talk about it as internal and external data as well. You know, we are focused on the external data, the charts, the markets, what's in front of us. But in the heat of the moment, what's really going to happen is our perception and our judgment and our action is really going to be influenced more by the internal data, which is both physiological, biological, as well as emotional. Let's see. I'm just going to briefly go over this slide because I want to save time to have some questions here. But the ability to recognize a pattern in the market is not enough for a trader to succeed. Now, the interesting thing is that as humans, we're natural pattern seekers. You know, we're natural pattern seekers because we evolved this way. We survived that hunter-gathering phase of human existence thousands of years ago because we could adapt to our environment. We certainly were not bigger, faster, stronger than other predators, but we could adapt. And part of that adaptation function came from our ability to recognize patterns in our environment, patterns consistent with threat or opportunity. Those of our ancestors that could recognize patterns of threat or opportunity survived and passed on their genes. So we're all natural pattern seekers. Now, that's all well and good. The issue is that it's not just about patterns outside of us that we have to be paying attention to in trading. We also have to recognize that it's our own internal patterns, including our emotional patterns, our physiological patterns, our cognitive patterns. What would happen if you directed some of your attention and effort to understanding your internal patterns? How would that change your trading? I think it would make a significant difference. Now, you know, if you have 100 traders with the same charts, the same method, the same account size, pretty much everything the same, you're going to see a wide variety of results. And when you realize that you're really trading yourself, because that's really what's happening here. We're not trading the market. You're trading your P&L on a certain level, but more accurately, we're all trading our feelings in relation to our P&L. And when you realize that, it will be a big leap in your evolution. The next step is to actually do something about it. Instead of directing all your focus on markets, start directing some of the focus onto yourself, since this is really what you're trading. You know, it's not about IQ as being the best predictor for trading success. It's really about EQ, or emotional intelligence. Business executives know about this a lot. In fact, the higher up the ladder you go in the executive world in businesses, often what you'll see is the most successful executives don't necessarily have the highest IQ. They're the ones who are the most emotionally intelligent, okay? And in the world of business performance, you're seeing a lot more of the top performers working with coaches. In fact, an interesting thing that I've noticed in my coaching is that I've been working with executives, some of them who don't even trade, more and more lately because they're looking for that edge. It's a very interesting phenomenon that I'm seeing. Now, let's get to some practical stuff. I'm going to save some time here to get to the end and have some questions, but process versus outcome goals, okay? We need to focus on what we can control, not what is outside of our control, things like market movement. So a lot of traders will experience a trade tick by tick. Each tick in our favor brings that sense of hope or relief. Each tick against us feels like a threat or personal assault on us. And even if you don't experience a trade tick by tick, just the fact that you're interacting with something that is in constant motion, where you're required to make a judgment call about it, it's going to generate different types of emotions, a lot of different types of emotions. And I didn't have time to talk about different types of emotions today because I got a late start. I apologize for that. Developing good habits, developing a good process. You know, one of the things about developing a habit would be, of course, starting off small. Looking at small habits and then going out from there. Developing habits in other areas of your life. Can you go to the gym every day? Can you become disciplined in other areas of your life? Because that possibly you may see that generalize over to other areas of your life, including trading. Okay? And I will say that finding the right process goals and focusing on them is very, very helpful in developing new habits. And that's something that I work on with my one-on-one coaching clients, is to develop meaningful process goals for their unique situation. You know, one type of process goal could be journaling real time your thoughts and feelings as you trade, and then going back and reading that journal entry before you trade the next day. That's a process goal. Or learning how to focus on your breathing and breathing differently when you're in a trade that's making you anxious, even though it's a winning trade. That's a process goal. There's a lot of different examples of process goals that you want to focus on process goals as much as possible, because we can't control the outcome of the trade. Now, the ultimate process goal, the granddaddy of them all, is the ability to control your actions despite pain or discomfort. So, and there also, I would say this, I would add, which I don't have on the slide, another ultimate process goal is, of course, to increase the time that you're in the flow state, increase the amount of time that you're in the zone. So developing process goals that can help you to tolerate discomfort, as well as process goals that can help to increase the amount of time that you're in the flow, increase the probability that you're going to be in the flow. Those are the kinds of process goals that everyone should really be focusing on. And so just some key things to remember. We're going to get into some Q&A here if we have time. I'll stick around later if you guys have time as well. Some of the key things to remember is that emotion is information. We're always going to have emotion. So instead of looking at emotion as an obstacle or a problem, learn to analyze your emotion in real time. And learn to analyze perhaps the emotions of the market and other traders too. That's what really good traders will do. Self-awareness, understanding the core issues behind the repetition of problematic behavior. That's going to involve, it's going to take some courage to look under the hood and looking at some of the real inner fears, some of the core fears. Focusing on process goals. And of course, like I said, predicting people to predict markets, understanding what other people are thinking and feeling, who's trapped, who's confident, what time frames are in my market. All those types of things are really, really, really important to focus on in trading. And I'm going to just finally just end with this little offer, and I'm going to stay for some Q&A. If people are interested in what I have to say, I have a self-paced advanced course, which is about 7 or 8 hours of pretty heavy-duty video, some concepts, and some very practical, actionable techniques and exercises that are designed to take you to the next level. If you're interested, my advanced course you can get to on my website. There's a 10% discount that's time limited. The discount will expire on the 30th of July. And for the first 10 people who purchase this with this discount, you will get a 30-minute one-on-one phone or Skype consultation with me. And with that, I'm willing to stay later and do some questions, however long Bob, you want to stick around for. It's okay with me. I'm willing to stick around and take some Q&A at this point. I'm seeing some questions coming up here. Let's see. One question is, are you familiar with the power of full engagement? Yes, I am familiar with that. It's a great question. And, you know, there's the interesting thing about self-improvement, of course, maybe it's not so interesting, is that there's really an endless number of possibilities, an endless number of approaches, and there's a gazillion books on self-improvement and websites and different approaches. But what I'm going to tell people is that you have to actually choose a path for yourself and engage in something, because even reading about something is not necessarily going to equate with a change in behavior. And it's really going to come down to, can you change how you respond to discomfort? So I'm seeing some more questions coming in here. One question is, I've started learning about how the heart affects the brain and the role in emotions. Yep, that's a very important area. I'm very familiar with that research myself, Chris. And neurocardiology, yep, actually my neighbor is a cardiologist. That's how I know about this. And so you're asking about breathing seems to be part of the key to being able to deal with discomfort of trading. Breathing is very helpful. Taking long, slow, deep breaths will change your heart rate variability. But I look at breathing think of it as first aid, okay? It's stopping the bleeding. It's something that you want to do, and it will help you. But ultimately, to kind of heal and to get to that next level, you're probably going to have to learn more than just breathing through the anxiety. It will help, definitely. I do it myself. I'm a big proponent on long, slow, deep breathing. I use a HeartMath M-Wave biofeedback device. Actually, I have an iOS version. I do biofeedback training, heart rate variability training with many of my clients. So it's also very popular among executives too, not just traders. So yeah, the heart-brain stuff is very significant. Here's another question from Martha, who is saying, so are you saying that in order to eliminate these 4 different biases, and Martha, by the way, those are just examples of biases. There's actually 97 of them, is to become self-aware on your emotions? I'm going to tell you that that's a big part of it. That's not the only part, but that's probably the part that most people will actually never get to. Most people will just read about the biases, and they'll have a great understanding of how the biases may appear and show up. But one of the most important steps you can take as a trader is to learn about your own emotions, to become emotionally self-aware, to begin to understand how the bias is beginning to show up for you. That will be one of the most important parts of changing how you respond to the bias. Here's another question. What do you think of self-punishing for bad behavior? Well, I'm not a big proponent on that. I've seen people try that. I've had many people ask about that. I think what's better is to actually reward the right behavior as opposed to punish bad behavior. Okay, it's very difficult to extinguish behavior. It's actually not easy, but it's easier to develop new habits than it is to change bad habits. And so I would suggest, I'm not saying you shouldn't punish yourself, but I'm just not a proponent of it. I think you should really look at more about developing the positive habits and learning to reward the good things that you do, and look for good things, even small things, and focus on those things and try and expand those to bigger things. Here's another question from Martha. You mentioned Matt. That was a story that I told about one of the folks I've worked with. What is the difference between an individual trader who does this as their own source of income and a professional trader? Martha, there are so many differences. And there's a lot of different types of professional traders, of course. There are people on prop firms that are trading the firm money or their money or a mixture of money, or a bank desk where they're filling orders and possibly trading some of the bank's money, although that prop bank trading is kind of going away. There's hedge funds. There's a lot of different types of professional traders. But one of the big differences is that professional traders, this is their livelihood. This is their job. And one thing is that they will go to greater lengths to try and succeed. And that's probably why more than half of my coaching clients are professional traders, because they'll do what it takes to get an edge. Like athletes, athletes at the highest level of the game, whether they're professionals or perhaps an Olympic athlete, sort of an elite performer, they'll do whatever it takes. And so one of the other differences between a professional and an independent is how they handle risk, how they approach risk. Professionals understand that managing risk is critical, because if you don't manage risk, your investors are going to run for the hills and pull money out of your fund, or you're going to be out of a job if you're on a prop firm. But if you're an independent trader and you have the capital, you'll just fund your account more. So how you handle risk, there's a huge difference between professionals and independents there as well. There's a lot of other differences. I just went over a few. And here is another question. In the example that you gave about the bank employees, I think you're probably referring to the bank robberies, I'm assuming, when they didn't do what they were trained to do yet during a robbery, what sets those employees apart? Great question. It could be prior trauma. Often it also has a lot to do with their coping strategies that they come into the job with. And we all have coping strategies that we develop as human beings, that we grew up with, we develop as a result of our family of origin, going to school, all the different developmental stages we go through in life, all the different challenges that we face. We develop coping strategies. And some people have more adaptive and some people have more maladaptive coping strategies. And so one of the biggest differences I used to see in how people would respond to bank robberies was really about, what type of coping strategy did they come into the situation with? What kinds of strategies, plural, I should say, did they come into the situation with? And that can really vary from person to person. And so a big part of the work in training is really going to be about looking at your coping strategies. And many people have maladaptive coping strategies in trading. I mean, an impulse trade, in my opinion, that's an example of a maladaptive coping strategy around the anxiety that comes from the fear of missing out. So you're going to have to change that maladaptive coping strategy of jumping into a trade too quickly, or the maladaptive strategy of ignoring your stop or moving your stop or adding size to a losing trade as it continues to go against you. Now, that is a coping strategy that you may have learned in some other area of your life. Maybe you learned to dig in your heels and to be stubborn and to never give up, and that helped you to succeed in some area of your life. But in trading, not giving up on a trade is really dangerous. You'll blow yourself out especially if you're trading in futures. It goes in the wrong direction, you're done. So many of the coping strategies that we've learned, perhaps, for instance, being really focused is a great coping strategy. It's an adaptive coping strategy, but it can easily sort of take the form of becoming stubborn for a trader, or becoming obsessive or compulsive, or not being able to notice other pieces of information on your screen because you're so focused on one thing and blocking things out. So what might be adaptive in one area of your life or in previous other endeavors in your life may not be so adaptive for you as a trader. And the same thing would apply to those employees who experience bank robberies. And by the way, I've personally been involved in, I shouldn't say involved in, handled well over 100, probably closer to 200 bank robberies over the course of many, many years, having been a first responder to people who've been involved in a bank robbery. So I have a lot of experience with this. I've also been I've worked with hundreds and hundreds of traders one-on-one over the years as well. So I speak from experience. Let's see. What other questions do people have? I think I may have missed a few, but I may not. Let's see if I can go back. Let's see. One question is, have a screenplay on developing self-reliance in trading that specifies sexual repression as the obstacle to overcome, titled Program to Fail. Not sure if the question doesn't really make sense, but this person could re-ask it. Well, I guess what I'm going to say, I don't really know how to answer this question because I'm not quite sure what the question is, but I think that maybe what you're getting at is, are there things about us that may have nothing to do with trading, things that may have occurred long ago that can impact us in traders? And the obvious answer to me is yes, because I see it all the time in my coaching clients. And the coaching clients that I work with, the ones that are more comfortable about talking about what's really happening with them now, as well as happened to them in the past, whether it be a traumatic event that they went through with a teacher when they were 8 years old, or something with their parents. Maybe they were ridiculed on the football field when they were 12 and they were laughed at, or there's all kinds of things that I've seen that people hold on to subconsciously that gets expressed into their trading. And that maybe some of those events were reinforced through other later events in their life. And very oftentimes what I'll see in my coaching client is there will be a theme of various emotions and unmet developmental needs that this person has had in their life that keep getting expressed into their trading behaviors. And when we begin to unravel what those unmet developmental needs are, oftentimes a light bulb goes off for the trader, and that's very often the beginning of a very significant change in their trading. Doesn't happen with everyone, but I've seen it happen with many of my clients. Let's see more questions coming in. Let's see. How can one identify their coping mechanisms is a question from Weston. How can one identify their coping mechanisms? Well, so coping mechanisms, Weston, a nice way to begin to identify them would be to kind of categorize them as adaptive and maladaptive, and looking at, and also the fact that sometimes they're, in one situation, it might be an adaptive coping skill or mechanism or adaptive strategy, and in another situation, it may be maladaptive. But start to look for things that you do repeatedly that don't work for you. That would be an example of a maladaptive coping mechanism. Okay, I think everyone needs to do that. When we journal, that's part of what journaling is all about, is being honest and recording what we're doing and why we're doing it. And let's see, another question from Martha. What is the name that you said describes the heat map on emotion in the body? Well, I don't think there was an actual name, but well, there's the idea that emotions are visceral. And if you're interested, Martha, send me an email to my website and my contact page, and I will be happy to send you that slide. And in fact, I'll send you the whole research that goes with that slide as well. If you're interested, I'd be happy to send that to you. And then another question is, do I offer group sessions with traders? I have not done that in the past. I may do that in the future, Martha, and I'm considering it. But at this point, it's mostly just been one-on-one and doing the self-paced course. I do group work with professional traders on site at trading firms, proprietary trading firms and hedge funds, but I have not done group coaching with independent traders. Have not done that yet. And let's see. So RK is asking, go to energy healers to delete unwanted patterns held in subconscious mind. I'm going to say that I've had a lot of emails from clients who've been to energy healers who continue to make the same mistakes in their trading anyways. And now if that helps, if energy healing, and I'm a big proponent of meditation, and there's a lot of Buddhist concepts in psychology and trading psychology that can be very helpful. But if energy healing does not do the trick, and it doesn't for many people, I'm not anti it at all. I'm just saying if it does not do the trick, then I think you need to consider something else. Another question would be, what beginning resources / books do you recommend for self-awareness? Well, you know, I think first of all, reading a book is not going to increase your self-awareness because it's reading is an intellectual endeavor. So something you can do that's absolutely free is beginning a practice of mindfulness meditation. And you can Google mindfulness meditation. There's many websites, lots of resources. You should not have to pay money to know how to learn how to meditate. Of course, there's systems that will charge you money like transcendental meditation and things like that. You shouldn't have to pay money to learn how to become self-aware. What I do in my coaching is I take people pretty darn far, and it's often further than they're going to be able to go on their own, because I sometimes will poke and prod, and you know the old saying goes in my field is we comfort the afflicted and we afflict the comfortable. So sometimes it's more than meditation is going to be needed. But I'm going to say a great resource would be meditation. Mindfulness meditation is a wonderful resource, absolutely free, something that I think everyone should learn to incorporate into their routine. All right, another question is, excluding your free email, does looking at other traders' free emails discussing possible trades create a distraction from having self-awareness and self-management of my own trades? Well, that's a good question, Lars. I think what you're asking is, you know, sort of the whole, you know, paying attention to what other traders are doing, and you know, of course, you know, we want to get ideas. We all get ideas from other traders. I think that's something that's been happening. I don't see that ending anytime soon, and there's a certain, appeal to that. But what I'm going to say is that no one's ever going to be able to trade like anyone else. And what I'm also going to tell you is that many of those traders that you're seeing out there on Twitter, Blogosphere, CNBC, Bloomberg, what have you, many of them are not even profitable traders. And I'll tell you, I'll never forget, I have a coaching client, actually a coaching client I've been working with for 2 years, off and on. He's a profitable trader, and we work together when he needs it, and we don't when he doesn't. One time we were on the phone, and he said, Andrew, turn on TV, turn on CNBC. And I said, okay. That guy right there, the guest on CNBC Fast Money, he doesn't even trade, and he's talking about a position. And he knows the guy, his friend of his, and he was telling me he doesn't even trade. So much of what you're going to see is a lot of BS. So how do you separate from that? You know, hey, you have to choose what you're going to expose yourself in terms of the media. And personally, I think less is more. There's no shortage of information out there, but it's really going to come down to, You're not going to be able to follow anyone else. You're not going to be able to trade like anyone else. Um, I have right now at present, I have 3 one-on-one coaching clients that are well-known educators, and only one of them is profitable. So, what does that tell you? So one more question. Last question is, what I'd like to know is, when do I determine if I need coaching? The first question, Martha, is that you have to have an edge in the market that you can articulate, because all the trading psychology in the world isn't going to help you if you don't have an understanding about market structure and how markets work. So that's really the big prerequisite. So what I do is I always talk with the potential client, and I assess for that, first of all. And I also want to assess, how willing they are to look at themselves honestly, because it takes a lot of courage and a lot of hard work. And those are some of the prerequisites for coaching. Not everyone is going to like coaching. Not everyone's going to want coaching. But I think that for those who are interested in it, shoot me an email, and we can talk about it on an email, perhaps have a conversation about it if it really seems like it might be something that is a fit for you. But I'm very careful on who I take in as a coaching client, because I don't want to waste my time or anyone else's time or money. My time is precious. I don't work with many coaching clients. I only have room for 1 or 2 at this point in my current practice. And so I'll leave it at that. And so finally, Laura says, thank you for a great webinar. And if I don't see any more questions, I may have missed a few questions. I apologize. Feel free to send me an email. I'm happy to answer your questions on email. If I missed your question, or if you have a question later on, I do respond to all my emails. Sometimes it takes me a day or 2 to get to them, but I do respond to all emails. And let's see, I think that about wraps it up. So I would encourage people to sign up for my free email newsletter. It's free. There's no risk in that. You can ignore it and unsubscribe to it at any time, but it gives you specific ideas that I talk about, some of them today, as well as things that I don't talk about in my webinars, things that I talk about with my coaching clients. So feel free to get in contact with me if you have any other questions. Sign up for my email newsletter, which is free. And that's about it, Bob, unless you have anything else you want to come up with or say. I think I hit most of the questions. And again, I apologize if I missed anyone. Please send me an email, and I'll answer it then.
Yeah, and thank you for sticking around and making sure that the questions that were asked were answered. Obviously, we did have that audio trouble up front, and for those of you that bared with us while we got Dr. Menaker all squared away and able to present to you this afternoon, I want to thank you, and hopefully you were able to stick around for the full event and have your questions answered here at the end. So I want to thank everybody for staying a little bit extra time with us, just so that we can give you the full presentation. And I want to thank Dr. Menaker as well for taking that additional time and making sure that your questions got answered as well. So that being said, it was a terrific day, terrific event. This stuff is so powerful and can mean so much in a person's trading career. I hope you took some value out of this afternoon. And for anybody that is ready to get started with the advanced course, obviously Dr. Menaker is offering a generous 10% discount for that course for everybody. But in addition, for the first 10 that sign up, you'll get a free one-on-one session with Dr. Menaker over the phone. And he'll reach out to you with those additional details for the first 10 of you that sign up. As well, you can sign up and receive the free newsletter. Just go to the homepage. We have a link there on the left-hand side of your screen, and sign up on the left-hand side of that screen. While you're there, you can also find out more information about Dr. Menaker and his practice, and all the products and services that he has available to you on the website. And with that, I just want to remind everybody that we did record today's session. The recording will be made available tomorrow morning. We'll also post it to the archived webinars section of our site and to Dr. Menaker's expert page on the Trader Kingdom site as well. And again, you can find that as soon as tomorrow morning. Thanks so much, and we hope to see you again here soon.